Good morning everybody, welcome back to Cilinix Crypto. Hope you're all doing great and welcome to this new video on Ethereum. Was necessary, obviously we've had quite a lot of bearish momentum in the markets. I don't cover Ethereum quite often because I know that there's way more demand and way more interest just in general, even though that's not an English word. It works in Dutch. But more people want to see Bitcoin updates, all right? And everything in the market is correlated to Bitcoin, so there's also more value to daily Bitcoin updates. But personally, I actually hold more Ethereum than Bitcoin. And that was pretty good in the last, since the start of January. But now it has turned sour a little bit, all right? So I just wanted to do a quick update video on that. Do a bit of a crash update because that is essentially what this is. I think we crashed yesterday. The volume in the markets, and I assume for Ethereum as well, increased massively. That was all in trying to hold support levels, all right? Ethereum already, to be honest, already broke out yesterday afternoon when it broke below this major level around 2400, all right? That was our main support level. Purely technically, that's a major level. You can also see that historically. But you also had some very strong trending indicators there. So if we would have wanted a little bit of a bullish resemblance of Ethereum, that needed to hold. But what we saw yesterday in the afternoon already is that the Ethereum Bitcoin, all right, so basically Ethereum against Bitcoin in terms of strength, had a bearish breakout. As you can see right here, it's still at those levels, but we did get a bearish breakout. So I assume that's going to fall down lower. I think there's a small opportunity for a bullish spike for Bitcoin here, but assuming that the Ethereum is going to be performing weaker against Bitcoin, even with that spike, that's not going to do a lot for Ethereum, because the only way Ethereum can actually regain some strength is if it breaks above 2400 and is able to hold that as support. And that is, at this moment, that's not one of the possibilities I see. All right, maybe if fundamentals change, maybe if we get some news regarding an Ethereum ETF, something like that, then something is possible. But at this moment, I think, all right, we put in a bottom indicator. There's a bit of support right here in this level around 2250 up to 2275. That's kind of where we are right now, 2300, this level. So I do expect a bit of a bullish spike, but I don't expect Ethereum to be bullish. All right, I think we'll just find resistance at 2380 and 2400, and that will slowly drop down to our main support level between 2200 and 2150, which corresponds to Bitcoin's level around 38,000, I think. So that lines up nicely as well. And that's also a bit of a bigger drop for Ethereum than for Bitcoin. So that lines up well with what we're expecting from Ethereum against Bitcoin. All right. So that's what I expect. I think in terms of, yeah, like I said, I mean, I don't necessarily see a different possibility right here. Maybe we'll consolidate a little bit longer at current levels. You can see that around 2500, there's a ton of liquidity. So like I said, a spike up for both Ethereum and Bitcoin, what's true is that there's a huge liquidity pocket just above the price. So I can see it happening that maybe, Friday we have some big news. Maybe if that's positive, we'll grab that liquidity, liquidate everybody there, all the shorters, and then drop back down. But the overall market structure at this moment, I still think is bearish. Now we all know that can change. That can change rapidly. But I think right now we're still in the early stages, all right? This is not a normal pullback. It is very much a real dump, all right? So yeah, this is what you should expect for now. Of course, not along these lines, but it will probably be a bit slower with some bearish spikes in the middle. But I'll keep you updated on that if you're interested in that. For now, though, thank you for watching. Take care and bye.